Good morning, ladies and gentlemen. My name is Michalis and I'm one of the market analysts here at HFM. I'd like to welcome everybody to today's session where we're going to be looking at the euro, and we're specifically analyzing and evaluating whether the euro is overbought, because the euro has increased in value for 4 consecutive days by more than 4%. So we're looking at a lot of bullish volatility. It's the strongest bullish trend that the euro has seen since actually we were looking at COVID lockdowns. So this is something which is extremely interesting, and the upward price movement is being driven by several factors. Firstly, we have to take into consideration that German bond yields have seen their worst day since German bonds, that is, have seen their worst day since the fall of the Berlin Wall. Now, that's having a strong domino effect on the euro. We also have to take into consideration that Trump any day could announce tariffs on the European Union, and the EU is in a state of emergency. They're looking to break their fiscal rules in order to increase spending on defense, and they're looking to do so while the economy is in a state of economic stagnation. So there's a lot of reasons why the euro is the best performing currency of the week and seen such strong bullish price movement, not only against the US dollar, which we will look at now, ladies and gentlemen, but across the board against all currencies, even against the Japanese yen, which is the best performing currency of 2025 so far. So yes, the bullish trend is undeniable. Most trend and momentum based indicators are still indicating upward price movements. However, there is a lot of signs that the price is overbought as well. And to be honest, when we're seeing such strong upward price movement, a lot of the time it is known within traditional economics that the price does not necessarily see a different trend or a full correction, because we have to take into consideration a full correction. We're looking at the price either go into the previous low or go into the average price movement of the previous range bound trades. So we're not necessarily looking at that, but if the price is overbought, in which case it could potentially see a retracement. Now, why are we getting indications that the price is overbought? Well, firstly, if we're looking at our two trend lines, if we look at the 75 bar exponential moving average, we're looking at the price almost 2.5% higher. So that is significantly above the average price which traders have bought the euro for. And if we're looking at the sentiment line, which is the 100 bar simple moving average, we're looking at almost being 3% higher than the average price of the last 100 days, the last 100 bars, sorry. So this is one indication that we have that the price is trading above its intrinsic and fair value. The other indication, ladies and gentlemen, is the relative strength index, and not only the relative strength index but any oscillator which you choose to use. We can see the relative strength index is trading above 75, so that's officially an indication that the price is overbought. But we're also seeing that the RSI is slightly tilted downwards. It's tilted downwards, whereas the price is tilted upwards. So this is what is known as a signal of divergence. That again is indicating that the price is overbought. So in terms of fundamentals, ladies and gentlemen, yes, there's a lot of factors which drive in the price of the euro fairly higher. So yes, we can see that in terms of economics and fundamentals, there is that domino effect. But in terms of technical analysis, we are seeing indications that the price is overbought. We also have to take into consideration, ladies and gentlemen, that today, this afternoon, we will have the European Central Bank release their rate decisions. There will be the monetary policy statement, which may give some forward guidance on how many rate cuts we're likely to see throughout the rest of the year. But the main thing is the press conference, because like I said, Europe is in a state of shock, a state of emergency. They're looking to break fiscal policy. They're looking to increase spending on defense. They're most likely going to see within the next couple of months tariffs from the US. And in addition to this, the European economy is in a state of stagnation, which is something that previously we weren't expecting. So what the European Central Bank potentially may look to do is to calm the waters. And if they look to calm the markets, ladies and gentlemen, then it can have a negative effect on the euro. It could have a positive effect on other assets related to the European market, but in regards to the euro, it can have a negative effect. Whereas if we look at a 3-minute time frame, because of course when we're trading CFDs, a lot of the time CFDs are designed and appropriate for short-term trading. So I'm switching here to a 3-minute time frame, and we can see a lot of volatility. We can see a lot of up and down swings. Ladies and gentlemen, this is likely to continue. These up and down swings are likely to continue until we get the press conference and the European Central Bank's rate decision. Now, because we are seeing that, ladies and gentlemen, the average price, the moving average 200 bar moving average, which is basically an average price of 200 bars, that's going to be extremely important. Why is it extremely important? Because whenever we see significant upward price movement on the 3-minute time frame, and again we're going to go to these resistance levels, there's a high possibility based on range bound trading, if we are going to see those conditions, that the price will decline back to this simple moving average. And the same applies to if we're going to drop below. If we're going to drop below and if we continue to see range bound conditions, then again that 200 moving average will be significant as well. So we can see, as we've gone to that resistance level, the price is always already looking to trade back to that average price movement. Just as we're speaking, we can see that is happening. But again, like I said, if it continues to decline, ladies and gentlemen, for example, it declines, let's say, for example, down to here, then again, it's the same scenario. It could retrace and move back to that 200 bar simple moving average. So that's a very key price that traders can potentially look at in terms of a target. The resistance level, ladies and gentlemen, is very clear on the market, and it's very clear on our charts because we're trading at a significantly high price. Like I said, 4 days of consecutive bullish price movements of more than 4%, which for the currency market is a lot of volatility in such a short period of time. Whereas, ladies and gentlemen, if we're looking at the support level, we of course have a support level here. We also have support levels, a support level here. What most traders will look to do is either concentrate on the support level which is furthest away, which is here, or a lot of traders, ladies and gentlemen, will look at an average support level. Now, if we're going to look at an average support level, the support level is approximately here, because we can see we've got a slight support here, support level slightly higher here, and we've got some support levels which are slightly lower. So these two levels are extremely important, or anywhere between those two lines. And again, if we are going to see a decline, ladies and gentlemen, to, for example, these levels, then again, that 200 bar simple moving average is extremely important in terms of mean reversion and range bound trading, ladies and gentlemen. However, ladies and gentlemen, after the ECB's rate decision, then we can start to look at moving out of the range bound trading and start looking at more session based trends. Now, if we are going to start to look at session-based trends, if we are going to drop below this support level, ladies and gentlemen, or if we're going to be able to maintain stronger price movement below the 200 bar moving average, so not necessarily breaking below this level, but maintain a price below this 200 bar simple moving average, then we can start to look at speculating downward price movement based on technical analysis and based on this technical analysis setup. Whereas, ladies and gentlemen, if we are going to regain 65% momentum of our latest impulse wave, this is currently the impulse wave here. Of course, after the rate decision, it will be a different impulse wave, but this is something that you can still do and apply at that time and throughout the day. 65% is approximately here, so just above 60. If that's regained, that we're going to see the price increase above there, then we can potentially start to speculate upward price movement. This is, of course, a 3-minute time frame. So here we're looking at short-term trading, ladies and gentlemen. So, ladies and gentlemen, that is it for today. Like I said, we got a lot of indications that the price is overbought. We're trading above the 75 on the RSI. We're trading more than almost 2.5% above the trend line. We're trading almost 3% above the price sentiment line. We've got a lot of fundamental factors, though, which are indicating that yes, indeed, it's understandable that the euro has increased significantly in value. Like I said, we've seen the worst day since the fall of the Berlin Wall for German bonds. We're likely to see tariffs from the US, and we're looking at the European Union looking to break fiscal policy and rules in order to increase spending on defense. So there's a lot of factors there which is driving the price higher, but it is going to depend massively on the ECB, because if the ECB look to calm the market, then indeed the euro may retrace and see downward price movement throughout the day and the session at least. Of course, in the longer term, looking at tomorrow and Monday, it will also depend on tomorrow's NFP figures. So, ladies and gentlemen, that's it for today. Hopefully you found today's session educational and informative. Of course, trade safe, trade responsibly, and we'll see you on our next session. In the meantime, goodbye.